Okay, watch your mouth, man.
Thank you. Have a lovely meeting.
Thank you.
Thank you.
So you can call it to order, John. We're
All right,
ready to
I'd
go.
like to get this meeting going here. All right, Jim, hello,
How are you?
good.
Wants to take right over?
Take it
All
over.
right.
Take it over.
All right. Well, thanks for having us. We were here May 1st, 2023, presenting the audit for the 2022 year. Here we are, May 1st, 2024, presenting the 2023 audit. It's a nice 90-page report for your leisurely reading.
Yeah.
But we'll go through and touch upon some of the highlights. And basically the format of these reports, years ago, there was a lot more flexibility to them. Now they're very structured. You have our opinion letter.
Yeah.
Then you have the management's discussion and analysis. Then financial statements start with what's called the government-wide statements, and then the regular fund financial statements. And then the notes to the financial statements. And then after that, you have what's called required supplementary information. Every bit of that, which encompasses probably 75% of this report, is all required in that order, in the format it's in like the notes to the financial statements are pretty much every word of the notes to the financial statements are required. Every bit of it needs to be there. It's not until you get past the required supplementary information, which ends on page 7. Keeps going. Well, page 70. That you finally get into some stuff that's just supplementary and not absolutely required to be part of your report. And then there's even some more required disclosures at the end that I'll touch upon. So again, this, you could look at, for example, Bar Harbor's report. You could look at Bar Harbor's report, be the same format, There's, I think their report's a few extra pages. It's up over 100 pages, but other, all stuff falls into the same order anyway. So pages 1 through 3, the independent auditor's report. These have become increasingly stretched out with more information in them, but basically what it says here, it's an unmodified or clean opinion, saying that your financial statements that follow are a fair presentation of your operating results for the year ended June 30th, 2023. That's what these 3 pages say, basically. It takes 3 pages to go through that information. Management's discussion and analysis is pages 4 through 10, I believe. And so these are the financial highlights in the narrative format. So you can read through this, pick up on the changes in fund balances, discussion on long-term debt. There's some condensed financial information in here, some real condensed financial statements. We got a few little pie charts in here on how the revenues break down for the town, just for example, on page number 7, you can see from this pie chart, 88.4% of the town's revenue come from taxes. And that's both property and excise taxes. And the other 11.6 is from everything else, all the other sources of revenue that you have. And then we have one there for the expenses as well. And you can see, education being the biggest single item, but things are, split up into the various departments of the town as far as your expenses are concerned as well. On page 9 is where, and Kelly, you guys all know Kelly, I'm sure. I mean, she's worked on your audit for many years. And so on page 9, she's listed here a lot of the budget versus actual operating results for the year, talking about what some of the larger variances are, whether they be a positive, a favorable variance or an unfavorable variance. So there's a lot of description there as far as some of these changes are concerned. And then on page 11, the financial statements begin. And before we go there, actually, we have us jump back to page 4. That's the first page of the management's discussion and analysis. In the middle of page 4 is the fund highlights paragraph. And it so basically says at the close of the year ended June 30th, 2023, the town's governmental funds. So that's basically all of your funds with the exception of the marina, which is an enterprise fund. Total fund balances was $16,814,852. And of that amount, $3,773,701 was your general unassigned fund balance, or your surplus balance. Represents approximately 17% of your expenses for the year. The handout that I gave to you, the one-page front and back handout, showed where you've been for the last 3 years as far as your fund balances, and we also have a few other towns there. We got Bar Harbor, Tremont, and I think Castine is there also for you to compare and see where they've kind of been running for the last 3 years as well. And you can see your numbers are pretty comparable with Bar Harbor's. You know, they've been in the 15 to 19% range. You folks have been in the 17 to 20% range over the last 3 years. Tremont's been in the 14 to 16. And Castine, they maintain a tremendous amount of surplus in terms of percentage of their expenses. You know, they are a smaller town. So dollar wise, your numbers are quite comparable, but as a percentage of their annual expenses, they're significantly higher. I brought Castine into a lot of these presentations a few years ago because we get into discussions about debt also, as far as how much debt do we have. You know, do we have too much? Do we have more than we're allowed to have, and so forth? And at the time, we started, you know, answering that question. Castine, they had a lot of debt for a government of their size, but they were still well within what the statutes allow. So we'll talk about debt as we get a little further in. Okay, so financial statements begin on page 11. And this first financial statement, Exhibit A, the statement of net position, is a listing of all of the assets of the town of Mount Desert as of June 30th, 2023, on the top half of the page. And these are not just liquid assets like cash and investments and so forth, but also a large portion are the town's capital assets. And these are listed at their cost, and in some cases, going way back, their estimated cost. Because it's been, I mean, how many years has it been now? It's been like 20 years since GASB 34 came on.
Yeah.
So GASB, a Governmental Accounting Standards Board, back about 20 years ago, said, we want you to start presenting part of your financial reporting needs to be like that of the for-profit sector. So we don't want to just see what a town has for liquid assets. We want to see all of their assets. So where in the past, capital assets, they were just treated as an expense as they were incurred. Now they're like, no, bring them onto the balance sheet as an asset. So that involved us going back and doing a fair amount of estimating of cost of assets, using things like insurance values. And when we're talking about the town's capital assets, we're looking at the larger assets. We're not looking at a table or chairs, you know, these small ticket items. We're looking at land, buildings, you know, large pieces of equipment, vehicles. But we're also looking at what we call the infrastructure assets, which are town, like parking lots, sidewalks, town roads, town-owned roads. So that involves a lot of measuring of roads and gathering estimates of what it would cost to build a road and trying to backdate it to a historical price and so forth. So of these capital assets, you know, a good portion of them are their actual cost, but then some of these older assets are gonna be an estimate using various methods to determine what those figures were. Down on the second half of the page here, we've got your liabilities and your net position. And we've got a long-term liability section, which includes not only the town's, long-term debt, for various bonds and loans that you have, but it might also be things that you have capital leases on. But we've also got these other liabilities that have come on in the last several years related to pension liabilities, for retiree, pension benefits, and what we call other post-employment benefits, which generally is life and health insurance benefits for retirees. And these have added some significant numbers to these financial statements as well. And a lot of pages to these reports. I mean, probably 25 pages, without exaggeration, of this report, mostly in the notes, and some of the required supplementary information is related to pension and other post-employment benefits that came on several years ago. Now, beginning on page number 13, the financial statements that we have here are going to be much more in line with the financial statements that you prepare here internally, the reports you get to work with to make decisions throughout the year. The capital assets are removed, the long-term debt's removed, and now we're looking at current liquid assets, being cash, investments, receivables, and so forth. And you can see in the liability section, it's pretty small here in the middle of page 13. It's all current activity. It's got the, accounts payable, the accrued salaries, that's related to the school department for the contracted teachers' pay and so forth. Those basically are the salaries for the months of July and August of 2023. So this, again, should fall much more in line with the records that you receive from your finance department for throughout the year. Pages, from this page basically through the remainder of the report, that's the case. We don't have the long-term stuff in any of the pages other than the first couple. So we got, beginning on page number 17, 18, 19, these are the financial statements for your proprietary, your enterprise fund being the marina. We've got a balance sheet for the marina on page 17. We've got a budget versus actual, statement of, of activities, of revenues and expenses on page number 18. And then we have your cash flow statement, which you'd have in the for-profit sector as a set of financial statements. Let's see, notes to the financial statements come next. Page 20. And it goes through page 59. So that's 40 pages of notes to the financial statements. And it's, again, it's every, if anything were left out of here, we could be written up for, we have our own audit every 3 years, and we're having it in a couple of weeks, and they might select the town of Mount Desert, and they might look through our work papers and our report, and if they find you left this out, then we get slapped on the wrist, and they usually tell us we have to take more training and so forth, something like that comes up, but basically, these are the notes, and every bit of this is required to be there for, for you folks to be in compliance with the GASB standards. And again, probably half of this at least is related to pension and other post-employment benefits. But like all of your loans are listed here, there's a debt retirement schedule, and again, most of it, the last half of it at least is pension and life and health benefits for retirees. Any questions before we continue on? We're about 2/3 of the way through here, so. Page 60 is a financial statement, one of the more useful financial statements that we have here. This is required supplementary information, so again, still part of the required presentation. And we've got here 4 columns. We've got your original budget, the first column, the final budget, your actual results, and then favorable or unfavorable variances, okay? So this pulls your whole general operating fund together in a budget versus actual presentation. And if you follow your budget columns down, there were some differences between original final budget, some budget modifications that were made during the year. If you follow right down to the bottom line, you have the net change in fund balance. Your budget was to reduce your surplus by $700,000. Your actual was that you increased your surplus by $133,551. So overall, you have a favorable operating variance of $833,551 for the year. You know, and that's kind of, you know, if you look at that variance column on the end, revenues exceeded budget by $315,059. And expenses were below budget by $500,273. You have a few unfavorable variances there in your expenses. But for the most part, you know, your biggest is in the public safety department. You were $377,101 below budget, public safety. Going back to that page 9 that I mentioned where Kelly was talking about a lot of your variances.
Yeah.
I think we should probably have something spelled out to you.
I think it has to do with the harbor, the contract with the harbor
Contract,
police, yeah.
Yeah.
The mutual contracts, 'cause I think you budget higher. And then got more, I don't know how, yeah.
So not filling the.
Yeah, not filling those
EMS
positions.
positions.
That would've
that were
been a
budgeted
big
for.
one.
Yeah,
Yeah, when you first budgeted for 8, we didn't fill them all right, like that's probably a big chunk of it too.
Now, following page 60, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 more pages of required supplementary information related to pension and other post-employment benefits.
There's no regulations about font size apparently.
Yeah, you know, and that's, you know. Yeah.
thought it was my glasses.
You know, and the thing is,
Glasses, I'm like.
they want us to build up over time a 10-year comparison of these figures. So we're trying to squeeze 10 years worth. We're on the pension stuff, we're 9 years in,
All right,
you know, and so
Right, I
that's
have-
why we get this. Because we gotta try to, they want 10 pages worth of stuff, 10 years worth of
right,
information on here.
so that's fine.
And they keep adding stuff, and so. I was looking at Bar Harbor's for their balance sheet, and the print on it is so tiny that it's almost embarrassing to this, because there's just so much stuff, and they want things broken out and displayed separately, so,
We need bigger paper.
yes, yeah,
11 by 17 next year.
yeah.
We're gonna be paperless. That's what they
I can
said.
zoom in.
Yeah, I can zoom in on my iPad too, I've got it, so, yeah.
See it.
Yeah.
Today you such a skull.
I'm a tree hugger.
But I mean, I've actually got I got like reading glasses on right now, but I have a more powerful pair that I have to use to review some of this stuff and to work with some of this stuff, because this, whatever this is, 2.0, whatever it is, it doesn't do it anymore, so.
And I don't wear readers and I have to put them on,
Oh,
just the
yeah.
little ones to see some of them.
Yeah.
Especially state reports.
So we pick up again with some financial statements on page 70. And these are taking the general fund revenues and expenses, budget versus actual, and it basically breaks them down into more detail. So what we were looking at back there on page 60, we're picking up again here. This is not required supplementary information. Again, it begins here. This is more of a, you know, of just plain supplementary information. So we're taking your revenue and breaking them into more detail, so you can see, you know, looking at these 2 pages, pages 70 and 71. You know, the biggest single budget versus actual variance I see is interest on investments. Which of course rates, you know, between investments, having a strong year in general and rates on cash investments being higher. You know, we're seeing that across the board, that budget versus actual investment earnings have improved substantially. You know, it was kind of starting to become an important figure again. Expenses on pages 72 and 73, budget versus actual. And you know, mentioned like between the fire department and the dispatch, those are your larger favorable variances on the expense side. And then on page 74 is basically a summary of the changes in your surplus. The analysis of change section on the bottom part of the half of this page, revenues again, 333,278 above budget, expenses 500,273 below budget for net change, net budget surplus of 833,551, and then there was a 700,000 that you used to reduce your tax commitment. So that shows your net increase of 133,551. We're getting close to the end here. We've got a number of pages that follow, basically taking your other operating funds and showing both balance sheets and income statements for those. Your various reserves. CIP comes along toward the end here. Really have any notes on these pages to go through.
I'm happy to say that some of the old projects are getting cleaned up, which is nice. Yes, yes, yep.
The very last page, I'll just mention briefly. The schedule of expenditures of federal awards. And, you know, the town only expended 112,866 of federal funds this year, and that's all expended at the school department. So, if you expend 750,000 or more in federal funds in your fiscal year, then we have to do, in addition to our financial audit, we have to do compliance audit, where we select the major federal programs and do a lot of testing on your compliance with those funds. But even if you don't have the 750,000, the state of Maine Department of Education requires us to put this page in, so that's why it's there. Even if it was zero, we'd have to have this page there, so we can check a box when it comes into the Department of Education, so. That concludes everything I have on the report. Now, on the second page of the handout I gave to you, bottom half of the page is section on debt. And, you know, the town of Mount Desert, you ended the year with, you know, basically 20.4 million in debt, total debt. And that still, as a percentage of your state valuation, is, I think it's like 0.73%. So it's pretty, and you're allowed to have, you know, a pretty substantial amount of debt. You know, it's defined in the notes to the financial statements, the percentages there, but in grand total, you can have up to 15% of your state valuation.
Wow.
So you're well below what the state statutes allow you to have. And there's different amounts for, you know, wastewater plants and things of that nature, and schools and airports and various things. So.
Mhm.
But you're even, like I said, Castine, they're, you know, they're at about 1.5 now. You know, when I first started doing this, they were at about 3.5. It seemed like a tremendous amount of debt for them, but still well within what the statutes allow you to do.
Yeah.
So, and I think really the way things are set up in the state, for you to borrow money and go through your bond counsel and so forth, I think it makes it pretty impossible for you to violate those statutes, because they get all those things lined up in the banks before, whether it be the Maine Municipal Bond Bank or the USDA or a commercial bank, they're gonna make sure that all of that all of those requirements are met. So,
Sure.
uh,
Jim, is that lower than what we do? I know 0.73. Is that about typical, or is that lower than what we normally would run in your experience over the years?
I think you were about a zero change this year. You had some new debt, but then you retired some existing debt.
Yeah.
So I don't think it changed much. I think you went from about like 19.9 million to 20.4 million in this past year. So a little bit of an increase overall, but not much of a change. And then, of course, your state valuation
Went way up.
goes up every year,
Yeah.
Mount Desert is valued at about 2.8 billion.
Yeah.
So that gives you some funds to work with right there, so.
Yeah, so it'd be pretty hard for us to get up to 15%.
Yeah.
Unless we decide to
Yeah.
go for an expansion baseball franchise. and
You
go-
need that.
Go to stadium down at the
Yeah.
marina, we might be able to do it.
You know you're being recorded.
That's keeping my mouth shut.
Just use it for an example.
You'd have to add a sewer plant, a water plant, an airport, to get you, out of all that.
Yeah, no helipad, no discussion about that, yeah, no.
So,
That's kind of fun.
so Kelly, as far as you want to make some general comments as far as the way everything went, and we've had no management letter again this year, which was great. Nothing to, bring to your attention as a written comment, on the audit or any, internal control weaknesses that we saw or anything of any significance, so.
No, it's just a little bit of transition with Jake and put a bunch of stuff online and then we're like, well, we need a bunch more stuff. And then we had to contact May, but she had everything and it worked out good. So I think this year will be even smoother where you've been here, so. Yeah.
Awesome.
That's
And,
great.
Yeah.
and I don't know what's gonna happen in the superintendent's office, we had the League of Towns meeting
Yeah.
this winter, and that,
We knew it wasn't gonna change this year.
You know,
Budgeting.
I left that meeting kind of hopeful that some things, it almost seems like some things might happen, but we're really in the same place as far as
Yeah.
when their books are closed and ready to be audited, and it's just, increasingly frustrating.
Right.
I don't think we really necessarily lost, we probably lost some ground overall when we think about all of the schools that are there. If everything gets consolidated, it'll all go away,
Yeah,
it'll be,
absolutely,
Yeah.
we won't,
Yeah, let's not talk about that.
So,
I know the superintendent, I thought he had was trying to get stuff in FY 25 budget for help in the finance office. I'm not sure if it went through, I'm not sure if it got approved, so.
I know the superintendent's budget overall is, as a percentage of the entire operating cost, is grown and grown and grown.
yeah. It seemed like when we had the meeting that day, we kind of pinpointed
Yeah,
the issue that,
Yeah.
we thought it was like two positions, I think, if I remember right.
I think,
yeah,
Yeah.
What we thought would
Yeah.
probably kind of solve the problem.
yeah.
Anyway,
Well,
So,
then there's human resources.
All right,
well,
Wow.
that's everything we have for you. Do you have any other questions for us?
yeah, no, I
I
don't,
don't think it could be any clearer.
yeah, it's pretty.
Yeah.
Great. Thank you.
Well, thanks for having us.
Yeah, Thank you
Sure.
very much.
thank you, thank you.
Good job, you guys.
thank you.
Thank you.
They did a great job,
Yeah.
Stacey, taking over and pulling that.
Yeah.
And
She's got good taste in color.
Lisa and her work.
I do have one little question.
I had everything done in the wrong folder.
Oh, that's okay.
I noticed that in
And
the
you can
marina,
organize that
there
any way
was
you want. You
under
don't have to keep it
assets,
right.
there was other funds
However, make
due
works
to the
for you guys,
marina
we can find or
something like
just
one
let us
point
know
something
if we
million.
ask for some dates.
What are those other funds coming in? and where?
Yeah.
So that sounds like, here, let's flip to that page. It sounds like an inter-fund receivable, due from other funds, 1,012,788. So that is between the general operating fund and the marina fund.
Okay, so this is a funds from the general operating fund into the marina.
Right, yeah, so it's within the town, and it's extremely common when you have,
I think they have their own checking account. Or- The marina doesn't have their own checking account, so that,
so it's basically the marina fund's cash is in the town's checking account.
Oh, okay,
And so it's,
so we owe it back, in other words.
yeah,
yes.
yeah,
Okay.
so we'd have an offsetting, payable on the general fund. For that same amount between the two,
Mhm.
so, and that's, like I said, it's extremely common. that-
Okay, is it easier or does it make more sense from a management standpoint?
Would you, versus them having their own cash account?
Yeah,
We've seen it both ways in different towns, so it's really a management decision on which way you want
It's been this way.
It's been this way, I think, here for,
Yeah.
as far as the marina's been
Yeah.
around.
I think it's the right way to handle it, considering it's just one fewer account, the bank account that has to be reconciled money.
Yeah, yeah, and then also as far as approving accounts payable warrants and things of that nature, they can all be part of the same versus having a
Yes.
separate marina warrant
Yes.
you'd have to have if you were paying bills for the marinas. So
A different account.
That makes sense.
probably streamlines things if anything. So.
well, thank you very much.
Great,
All right, thank you for having us.
thank you.
Okay.
Behind the page, we'll be starting this again in what, 3, 4
I know,
months?
I know. So better.
Yeah, sorry.
We need a motion to approve the report as
I
presented.
think we do.
So I would move that we approve
Still wanna do it.
the
Yeah, sure.
audit as presented from James Wadman and his team.
I would second that since.
Great. Any other discussion? All in favor? Awesome.
With
Thank you
thanks.
very much.
Thank you all.
No, you're
Move that we adjourn.
second. All in
All in
favor?
Okay. Very good. You were right.